So imagine this. You're ready to buy your new dream home or even get your new car. But when you apply for the loan, you're hit with a sky-high interest rate. Or worse, you're just denied altogether. It's frustrating, right? One of the biggest causes of this might be your credit score. We're going to dive deep into some simple yet powerful ways to monitor and improve your credit score, so you are always in control of your financial future. Let's get started. Hey everyone, thanks for coming to watch another of these videos. I really appreciate you guys showing up and giving me some views, some clicks, some likes. Today, we're gonna chat about something that I probably get asked about more than anything, and it's super important for your financial well-being. That's how to keep an eye on your credit scores and how to make them better. So a good credit score can help you get loans, lower interest rates, or even find a place to rent. So let's dive in deep to some easy ways to monitor and improve that score. So why should you care about your credit score? It's not just a number, it's a big deal for your financial health. It affects whether you can get loans, what interest rates you'll pay for those loans, and it can even affect things like being able to rent an apartment or a house, or even getting certain jobs. So a strong credit score can open up a lot of doors for you. First off, if you aren't already doing this, you should be monitoring your credit and routinely checking your credit reports. You should be able to get access to a full credit report or credit updates regularly, directly from the credit bureaus like Equifax, Experian, TransUnion, or get a free report each year from annualcreditreport.com. When you get these reports, you should first look for mistakes. Things like wrong personal info or accounts you don't recognize. Fixing these errors can save you a lot of trouble. Another great tool to help you are services like Credit Karma, Credit Sesame, or other apps that might be offered by the credit bureaus to keep an eye on your score and keep you alert if there's any big changes. Now, these services can help you stay on top of things and quickly address any issues as they come up. However, one of the things I like to note about these types of sites is that since it's not a fully pulled credit report, some of the information provided may not be exactly accurate or might just be a little bit different from what you've seen from an actual credit report you had pulled by a lender. Once you know where you might be, we can start to look for ways to help you improve that score. The biggest factor is plain and simple, paying your bills on time. This includes things like credit cards, loans, and even utilities. I'd highly recommend that you set up automatic payments or reminders on your Google Calendar or iPhone to make sure that you never miss a date. Another tip is to reduce your debt, especially in terms of being relative to the account's maximum balance. So a high debt relative to your credit limit, or we call credit utilization, can hurt your score big time. I would recommend to try to keep your credit utilization below 30%. So if you have a card with, say, $10,000 as a limit, try to stay below a balance of $3,000. It's often good to first pay down high balances to avoid maxing out your credit cards or those with high interest rates so you're not wasting a lot of your money. But you might decide it's a wise move to use what's called the snowball strategy if you have multiple accounts with balances on them. So let me tell you a little bit more about that. So if you're like many Americans with multiple credit accounts and cards with balances, but you're struggling to pay them all off, the snowball strategy may be perfect for you. Step 1, we need to list all of your debts. Start by listing all your credit card debts from the smallest balance to the largest. Don't worry about the interest rates in this scenario for now. Just focus on the balance amounts. Step 2 is to make minimum payments. So ensure that you are making the minimum payments on all of your cards to avoid any late fees and penalties. But step 3 is to focus on the smallest debt first. And what I mean by that is I want you to allocate any extra money you have towards paying off the card and put it towards the smallest balance first. This could be extra income from a side job, bonuses, or any savings that you might find in your budget. So step 4 is to eliminate the smallest debt. Once that smallest debt is actually paid off, cross that off your list and do not continue to use that account. Keep this balance at 0. That's very important, because next what you're going to do is move to the next step. So you're going to take the money you were putting towards the now paid off smallest debt and you're going to apply it to the next smallest balance, theoretically increasing the size of the snowball, continuing to make minimum payments on all your remaining debts. By doing this, you have now greatly increased the amount of money you were using to pay down the next card, while not increasing your own out-of-pocket expenses to do this. So repeat this process, knocking out one debt at a time. Each time you pay off a debt, the amount you can put towards the next one increases, just like a snowball rolling down a hill and picking up speed. Hence the name. Another way you can decrease your debt usage is by asking your credit card issuer for a higher credit limit. This actually lowers your credit utilization ratio without paying down more money out of pocket, as you will now be actually using a lower percentage of the overall balance. Just make sure that you don't increase your spending. A higher limit with the same balance looks good on your credit report, but you must be disciplined to not utilize it. Another tip for you is to avoid opening too many accounts. Be careful about trying to start new cards, and have too many accounts opened at once. Every time you put in a new application, it dings your credit score just a little bit. So space out your credit applications to avoid multiple hits to your score in a short period. So another tip for you is to continue to maintain older accounts. By keeping your older accounts open, this can actually help you. So even though it may have a zero balance or you may have paid off the account, do not close it. The length of your credit history matters. So don't close these old accounts unless you absolutely have to. By having these older accounts, it actually shows that you have a longer, stable credit history, which is viewed very well when you're applying for loans. Having different types of credit can also help improve your score. So this could mean a mix of credit cards, installment loans, or a mortgage, but I advise you only take on debt that you can handle responsibly and only do so if you actually need to. So, as I mentioned in the beginning, if you spot errors on your credit report, dispute them right away. Fixing mistakes can quickly improve your score, so it's definitely worth the effort to get any inaccuracies corrected. So one final trick that I have seen employed, and I even do it for my own family, is this: the authorized user trick. Becoming an authorized user on a family member's or a friend's credit card with good payment history can really help boost your score rapidly. Now, this is not something that should be taken lightly at all, as there may be some significant implications and risks to each party. But if you have a friend or relative who has great credit and is willing to help you improve yours, they can call their credit card company and ask to add you as an authorized user of one of their cards. Now, they don't actually physically have to give you a card or access to the card itself, and they probably shouldn't. But by simply being named on an older account that someone else with good credit may have, you have just now added that whole history to your own report. I've personally seen this work as a great way to get a quick boost if you have little or no credit established at all. So now, I'm generally a pretty responsible person with my money, so I can tell you that this is a method I'm currently using to help my own family. I have my wife and my kids added onto some of my accounts to help them create and boost their own scores, so that by the time my children turn 18, they will already have a great start to their credit with a huge history added to it. To wrap up, improving your credit score takes some time and effort, but it's a totally doable process. Keep an eye out on your credit, pay your bills on time, manage your debt wisely, and correct any mistakes in your report. With a bit of consistency and smart financial habits, you can keep your credit score in great shape. Thanks for watching this video about how to maintain and improve your credit. If you have any other questions or would like to be connected to a great lender here in Southeast Michigan, feel free to give me a call at 313-288-0553. If you found this video valuable, please leave a like down below and make sure to subscribe for all my future content. Thanks for watching, and I'll see you next time.